Hi guys, welcome to my channel. Forex with Temilo. It's nice to have you guys on this channel. In today's video, I'll be talking about the 3 golden rules you need while using the smart money concept to trade in the foreign exchange market. Okay, what are these 3 golden rules? The first rule is for you to identify the overall trend or structure. That is, you want to know this pair I want to trade, what structure do I have right now on it? Is it a bullish structure or is it a bearish structure? And you want to look out for this structure on the higher time frame, because the higher time frame structure is important than the lower time frame structures. Okay, the higher time frame structures are the external structures, while the lower time frame structures are structures within the higher time frame structure. Okay, so you want to check for the overall trend or the overall structure. Then moving on to the second golden rule. The second golden rule is for you to identify your supply or demand zone that caused break of structure. To identify supply or demand zone, uh, you need to know which structure the pair is. That is, for bearish structure, you want to identify your supply zones, while for bullish structure, you want to identify demand zones. If you are yet to watch my video on how to start trades, please do wait to watch that video, because at the beginning of the video, I explained extensively on the bullish and bearish structure in that video. I will also leave a link below in the description box to the video. Okay, so you want to identify your supply zone for bearish structure and you want to identify demand zones for bullish structure. Then going down to the third golden rule, you want to wait for confirmation entry on the lower time frame in the supply or demand zone that you have identified already. Okay, and this confirmation entry can be in form of break of structures or Wyckoff schematics. Okay, I also have I have 2 videos on Wyckoff schematics, the accumulation schematics and the distribution schematics, explaining Wyckoff. Okay, so with these 3 golden rules, let's move into Great Britain pound and US dollar, that's GBP USD, as let's use that as a case study to explain these 3 golden rules. So on GBP USD, on the daily time frame, we can see that GBP USD has been in a bearish structure. Okay, GBP USD is creating lower highs, lower highs, lower highs in the market, and creating lower lows, and lower lows. So from this we can deduce that GBP USD is in a downtrend, and that is, the structure is a bearish structure. So with this knowledge that GBP USD is in a bearish structure, now we want to identify our supply zone. Okay, so to identify our supply zone that broke structure, you want to look at the leg of your of the structure. You want to look at this leg of structure that broke the last low, that broke the last lower low to the downside right here. So at this structure, you want to identify your supply zone, and as you can see, we have this unmitigated supply right here. That is, this zone was responsible for this whole push to the downside. Okay, breaking this structure. Once we've identified this structure now, we've identified this zone now, we can see that this zone was left unmitigated, and just at this zone right here, we can also see imbalance right here. That is, the market left a gap behind at this zone, and we can see that this zone had this impulsive candle, this huge candle to the downside as well. So we know this is our supply zone that caused this break of structure to the downside. And for our third rule, the third rule says we should wait for confirmation entry on the lower time frame. Now, all we need to do is go down to the lower time frame and look for confirmations. Why are we looking for confirmations? We are looking for confirmations because without confirmations, if we decide to just get into a sell trade here, we'll be risking our account, because we don't know if price is going to take out this lower high. We are not sure. Okay, so that's why we need to wait for confirmation. And also, this will leave us with a huge stop loss. This is about 97 pips stop loss. So, and we don't want to get into trade without getting confirmation. So now let's move down to the 15 minutes time frame. On the 15 minutes time frame, all we need to do is we need to wait for we need to wait for confirmation. That is, to wait for confirmations, we need to map out our structure. That is our higher highs and lower highs that we had before we got into this daily supply zone. And you can see from look of things, we have this low, we have this higher high, this low, this higher high, this lower higher low, higher high, higher low, higher high, higher low. Let's zoom in. So in order for us to confirm that we are going bearish, we need to take this last low that was created in the market here. We need to see a break below this low right here. Okay, we need to see that low being taken out. Okay, so at this point in time, I want to wait for this low to be broken. Okay, I'm waiting for this low to be broken. So let's play. And yes, we got the break of structure. So at this point, I know we've confirmed that we are going bearish, okay, because we've broken below the major low that gave us a push into this supply zone. Okay, so now that we've broken structure, all I need to do is wait for my supply zone. All I need to do is identify the supply zone that caused this break of structure and take my sell trade off. As you can see, we have this unmitigated supply zone, and we have imbalance right here as well. We have this imbalance right here, this impulsive candle, and from the chart as well, we can see that this was the last high that gave us this low. Okay, that gave us the low that broke this higher low right here. So at this zone, at this level, I want to look for my supply, which I've been able to identify right here. And also this is my last high. So I can now set my sell limit at this zone and take my trade off this zone. So I am putting my stop loss above this zone, because above this supply zone, just to be safe, because sometimes, because this is the high, this is the last high, and sometimes you need to give your trade some room to breathe. You don't need to be hard on yourself. I want a 3 pip stop loss, I want a 4 pip stop loss, and be stopped out unnecessarily on trades that could have been a winning trade for you. Okay, so I had my stop loss. I can have my stop loss right here, and my entry right there. And for take profits, let's go back to the daily time frame. For take profit now, we should be anticipating for this low to be taken out, since we are in a bearish structure. Should be anticipating for this low to be taken out. But because I'm a day trader, I'm not a swing trader, we can decide to have our take profits at some strategic areas. Okay, and as you can see from this time frame, we can see this zone right here. You can see that we have gap, that is imbalance right here, market left this huge imbalance right there. Okay, so these are zones to target for your take profits overall. And also, if we go down to the 4 hours time frame, like I always say, you need to be very observant of your chart, that what's going on the chart. At this area, we can see that we have this sort of trend line liquidity, and as we know, the institutions trades towards liquidity, taking out liquidity in the market. That is zones where we have people placing their stop loss. Okay, because at these zones, people were buying off this trend line. People were buying off this trend line, and most people will have their stop loss at these zones. So this area is an area that has liquidity. Okay, so this is this area now is a zone to target for take profit as well, because we know liquidity will be swept from this area. So overall, this is our take profit, but you can take partials of your trade, maybe at this liquidity grab right here, at this liquidity that we at this imbalance that we can see also here. You can take intraday trades and take your profit at this zone. But overall, we are expecting price to come down to fill up this daily imbalance, and on the long term also we expect price to fill this to take out this last lower low, but this will take days. Okay, this will take days and weeks. Okay, so at this zone we want to have our take profit, and let's go back to the charts. Let's go back to like the 1 hour time frame or the 15 minutes time frame. So on the 15 minutes time frame that we have mapped out our supply zone, let's see if we get tapped in. And yes, we were tapped into the trade. Okay, we were tapped into the trade and markets went down. Let's move to like the 3 hours time frame so we can be fast with this, and let's play. So that was it. With just about 15 pips stop loss, we were able to get all this sell just by understanding these 3 golden rules. Okay, just by understanding these 3 golden rules and following them accordingly, we're able to get into this sell. Okay, and like I said earlier, if you are yet to watch my video on how to start trades, please do well to watch that video. This is yet another supply zone that caused a break of structure. We can see this low being taken out, and we say when we have a break of structure, market goes back to mitigate the supply zone that caused this. So at this point, this was a good zone to add an extra entry. Okay, if you were willing to take intraday trades, you can look for sales, look for confirmation entry and get into sell, since you know the overall trend and where market is going. But that's not our focus for this trade. So let's continue playing, and our take profit was smashed. Okay, our imbalance from the daily time frame was filled up. Okay, and from there market started reversing. Okay, so this is how to use these 3 golden rules. Okay, if you follow these rules, you have profitable trades in the foreign exchange market using the smart money concept. I hope this video was beneficial to you. Hope you gained something of value, and it's nice having you guys on this channel. If you are yet to subscribe, please click the subscribe button, and see you in my next video.